Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Ian Warwick, managing partner of Deepbridge Capital. Hello, Ian.
Good morning.
First off, can you just give me a bit of an introduction to yourself and Deepbridge?
So myself, I'm started my career in the Royal Navy. I became an oil field engineer and progressed on to the print industry, where I became a sales director. And I spotted an opportunity in digital asset management, which I then took to the States and listed on NASDAQ. Sold that company, came back to the UK and worked in different industries, eventually working with a group of high net worth individuals where my job was to scour the planet and find emerging software companies, as it was at that time. Sadly, I was an employee, but I learned that it was a significant opportunity. I went back to the United States and I was headhunted and parachuted into an enterprise resource planning software company where I undertook a 5-year turnaround, taking the stock from 2 cents to $1.60. And I left that company after 5 years of commuting to America and set Deepbridge up. Deepbridge was set up initially to use my skill set and that of other individuals who'd come from industry to work with a number of companies rather than working within one organization. Initially, we had not been involved in EIS. In fact, we'd never heard of EIS. And then we were introduced to EIS and we decided that that was a sensible product for what we wanted to do. So Deepbridge has developed over the last 8 years under my tutorage and built the team.
And today we're here to talk about the Technology Growth EIS. What is it? What does it aim to do for investors?
So the Technology Growth EIS is a way of allowing investors to access significant deal flow with companies that have substantial growth potential. That is hands-on managed by Deepbridge and the Deepbridge team that will nurture those companies and help those companies move towards a significant exit within a reasonable time frame.
And what sort of companies are you looking for in particular?
We look for companies in fairly specific areas. We have a very difficult criteria to meet, and that criteria is that the companies must be intellectual property driven. The management must have a deep understanding of the sector they're in. The IP must be disruptive in nature, in that it must be either creating a new market or significantly influencing an existing market. It must have global scalability, so we're not interested in a company that can only sell into, say, the NHS. It must have global scalability. And the company must also have the ability to move in multiple vertical markets. Therefore, if we can prove ourselves in several vertical markets with significantly more vertical markets to do, then we're going to get a better valuation at the end.
And can you give me an example of some of the companies you've recently invested in?
So recently, in the last 12 months, we've made a significant investment into a medical device business called Zillico. It's an interesting company because it crosses the border between both our life science product and our tech product, being that it's a medical device. Zillico was interesting in that it was already developed and had some traction within the NHS and had been approved by NICE, but still required significant funding. What we particularly liked about Zillico was that it pretty much followed the same path as one of our previous investments called Sky Medical Technology, albeit several years hence. Strong management team, ability to move into significantly more vertical markets, and the product had global potential.
And are there any other examples of new companies you want to share with me that you've invested in this year or last year?
Indeed, I think we have we have lots of significant businesses. One I would pick out in particular would be a company called Arb & Co. And Arb & Co are a company that had developed a suite of software solutions for the energy management of commercial property, whether it be an office building or a warehouse or a hospital. It just doesn't manage the environment and the control of energy usage, but it also manages the environment where people work. So it's significant in that it can make a working environment more palatable to the people who work in that environment, and therefore the productivity goes up. That business has made significant progress both in the UK and particularly in North America. At this stage, we have no significant competition for that business. Most of the technology has come out of Strathclyde University in a KTP partnership with Strathclyde, so that's quite significant, and we've been able to attract some very, very intelligent, super people to that business. I think Arb & Co has the potential to be a global business. What I particularly like about Arb & Co is it's legislation driven. So there is a real imperative right now from governments across the planet for companies to be more efficient about energy use. So energy management, energy use of commercial property is significant. Nobody's really addressed this marketplace as yet, but that combined with managing the environment in which people work. For example, the closer somebody is to a window, the different the temperature is. And what we've proven with this product is if somebody's sitting near a window, they are less productive than somebody who's sitting deeper in the office. Sounds simple, but if you multiply that across, say, Goldman Sachs office in New York, where there are 7,000 employees, and 1,000 employees are not productive, then it's significant. So very interesting business. We have already invested in it and we continue to do so.
And do you want to talk about some of the successes you've had? Have you had any exits yet?
So in the last 12 months, the most significant event we've had is that one of our investments, Sky Medical Technology, we offered an exit to all our investors, and they had the opportunity to either exit partially or not exit at all. And it was quite interesting to see that a lot of people bought into the future prospects of that business and decided not to exit. And a number of investors essentially took their investment off the table but left the rest to potentially run further.
And if the companies, that's a success, what about failures? Have you had many? And
So we haven't had any failures across our portfolio of 79 companies at this stage. Inevitably, we expect to see failures in our early stage SEIS, because we have a lot of companies that are early stage, and inevitably they all won't make it. But certainly in our Technology Growth EIS, where we tend to invest a little later, where a product is developed either at market or ready to go to market, then the opportunity for failure will then generally be based upon an inability of funding for future growth.
And if you see things going wrong, what do you do? How hands-on are you?
We have different companies where some companies have extremely strong management teams and are progressing in line with the plan that we've put together. And we have other companies where things aren't quite going according to plan. I have two companies at the moment where we have now taken the executive chairman position. And that executive chairman is spending 2 days per week in that company, directly influencing how that business moves forward. I think it's important to say that if you're just going to give a company the money, you have a reasonable chance you're going to lose your money. You have to give more. You have to give your experience, your knowledge, and in particular contacts. So we are extremely hands-on.
And if someone's looking to put money into an EIS this year, why should they go with you?
I think they should go with Deepbridge because of that very nature we've just talked about, in that we are hands-on. We look after the investors' money at every stage. We are significantly focused on helping develop those businesses towards an exit. Those exits can vary. I think also they should look at Deepbridge because we follow completely the new rules under EIS. So all our companies are knowledge intensive, so therefore they are not under any threat of HMRC withdrawing the EIS approval. I think a more significant point is any money invested in this tax year will be invested in this tax year.
Ian Warwick of Deepbridge, thank you very much.
Thank you.